I am not a financial advisor. This is not financial advice. Okay, welcome back. We're going to be talking about fair value gaps today. What are fair value gaps? Essentially, they're just gaps in the candles. You can also call them imbalances. So price tends to draw to these imbalances to balance them out. Pretty straightforward stuff. So I'm just going to draw one out for you guys. Pretend we have 3 candles here. Alright, don't mind the colors, it can be any color. Alright, so that's 3. And what a fair value gap is this here. Let me just draw it out. So it's the space in between the 2 wicks on either side of a candle. Okay, so this is the fair value gap. I'm going to show you some chart examples now. So let me just delete all of this. Alright, so what you're going to do, you're going to be looking at 3 candles to identify a fair value gap, and you just have to make sure that the wicks of the surrounding candles do not overlap. So if we look at this red, green, and red candle, you can see that if I draw a rectangle here, you can see that this wick and this wick don't overlap. What does overlap mean? If I can find one here. Alright, let's look at this green, red, and red candle. As you can see, this being the middle candle, you look at the 2 on the side. You see how this wick overlaps this wick, so there's no fair value gap here. If you look on this green candle, you see this is the middle candle. You see how this wick and this wick overlap each other. So those are not fair value gaps. There's no fair value gap there. This is a huge fair value gap here. You see, you always draw it from the first candle's wick to the 3rd candle's wick. Okay, so this wick to this wick. You see how they don't overlap, and this gap in the body of this candle is the fair value gap. How do you use fair value gaps? You can use it as a draw on liquidity. You can use it as essentially you can use it as a draw on liquidity. Price reacts 2 types of ways to fair value gaps. Okay, you can either respect or disrespect a fair value gap. So what does respect a fair value gap mean? If you look at this fair value gap, look at how price goes down. Okay, and you see how the body of the candle doesn't even enter this fair value gap. It just wicks it and continues in the same direction. Okay, that is what a respected fair value gap looks like. Alright, this can happen. It doesn't have to be just a wick, as long as there's no body closure, meaning if there's no candle that looks like this where the body closes above the fair value gap, you would consider that a disrespected fair value gap or an inverse fair value gap. So that's essentially my entry model. If you guys look back in my videos, I posted a video of my strat before, and essentially I just use IFVGs to enter the market. So once again, you have a respected fair value gap where there's no body closure, and I mean price can do whatever it wants to do in here, be it wicks. Even the body can enter like this. Alright, it can be like that, and the wick will be here. I can't draw it properly, but yeah. As long as there's no body closure, that would be considered a disrespected fair value gap. Okay, so this example is a respected one. Let me show you an example of a disrespected fair value gap. Okay, let's take a look at this green, and red candle. You always look at the 2 candles next to it. The wicks, make sure they do not overlap. So let me just draw it out here. Okay, you see how this wick and this wick don't overlap, so there's a fair value gap present here. And you see how this red candle closed through the fair value gap. Okay, this is called a disrespected fair value gap, an IFVG, inverse fair value gap, where once price closes through it, it will continue in the opposite direction. Okay, for respected fair value gaps, price will continue in the same direction. For disrespected ones, they will continue in the opposite direction, so there will be a reversal most of the time. So yeah, let me just show you one example of each, and then we'll call it a lesson. This is a pretty quick one, pretty simple concept to learn. Okay, all right, if you see this red candle pattern, all right, always draw it from the first candle's wick to the third candle's wick. So you see how these two wicks don't overlap, and you see how price came in. There's a body closure, but it's not through the fair value gap, so this is still respecting. And you see how the wicks respect this fair value gap and then continue in the same direction. Okay, so that's a respected fair value gap, and this is a disrespected one here. Then again, it's not 100% of the time that it will continue in the same direction. Like, respected fair value gaps, not 100% of the time they will continue in the same direction, and vice versa. For disrespected ones, they don't 100% reverse, as can be seen in this example here. I drew out from the first candle's wick to the third candle's wick. This is a fair value gap here. Okay, and you see how price on this red candle closes through it, but it doesn't reverse all the way. So it's not 100% thing. You guys can go back test this yourself, but most of the time, 90% of the time, these stay true. So like I said, you can use it as draw on liquidity, or a place where you watch for price and see how it reacts, and then you make a decision from there. Alright, there's also a couple of ways price can fill a fair value gap. If you use this fib tool, alright, let's say I draw this fair value gap here. Alright, these are the main markers that I use, the 0.5 and the 0.618. And price can either, for me, I'll keep it simple, price can either come up into the fair value gap. Let me just draw it. So let's say we go down and then we come back up into the fair value. Price can either come up here, alright, tap the start of the fair value gap and then continue down, or it can come up to the 0.5 and then continue down, or 0.618 sorry, and go back down, or just fill the whole gap and then come back down. And the last one obviously is an inverse, so you just close through it and then continue up. So those are the 4 scenarios that I use. Obviously there are other points on the fib retracement that exist, but I like to keep it simple. I just like to use these 2, and yeah, just see how price reacts off these levels. So that's how you use fair value gaps. You can either wait for price to draw into them, or you can wait for price to react off of them, watching whether how they respect it or disrespect it, and then you make a decision from there how you want to enter. So that's it for fair value gaps. Pretty simple stuff, a little bit simpler than liquidity, so just get this down, and you'll be good to go.